Welcome to the Eltropy Exchange podcast, where leaders of community financial institutions connect, learn, and stay ahead. In each episode, we sit down with industry executives, innovators, and experts for candid conversations about the challenges and opportunities shaping CFIs today. At Eltropy, we believe conversations matter. Let's dive in.
Good morning, good afternoon, and good evening. Welcome back to the Eltropy Exchange. My name is Michael Pupil, Vice President at Eltropy, and today we get a fun podcast today, international style. As you can probably tell, my background is a little bit different, Matt. We've had a lot of conversations, including what felt like 43 hours in the Wyoming airport where I got stranded. But today I'm doing this podcast from Rome, Italy, and so I want to thank you for carving out some time for me, because this makes the trip kind of fun, and I get to show the background a little bit. And so thank you for joining us today.
Absolutely. Thank you for having me, Michael. I think it's pretty neat that, like you said, international podcast coming to you today. Very excited to be on here.
Right on. Well, for those listening and watching, gives me great pleasure to introduce our speaker today and our guest, Matt Fehrmann. I don't think I've ever called you Matthew before, so I'm gonna refer to you as Matt. I feel like that's what your mom or dad would call you if ever you were getting in trouble. So Matt is a seasoned IT executive with more than 2 decades of progressive experience leading technology operations within banking and the manufacturing sectors. Since 2022, you have served as a Chief Information Officer at Kohler Credit Union, where you spearhead strategic IT initiatives, enhance cyber resilience, and oversee digital transformation to elevate the member service and experience. Matt, I'm going to start this podcast like I do with everybody else. Why don't we take it right back from the beginning? Where did your career start when it came to the credit union space?
Yeah, good question. And again, thanks for having me on. So it was interesting how I landed in financial services. I spent 17 years in the manufacturing sector, as you said. I implemented ERP systems. So for those on the call that know what SAP is, you know that's the biggest, baddest, most complex ERP to implement. What happened is I was finishing an engagement, putting SAP in a manufacturing company, and a friend called and said, "Hey, we need a new leader of technology at a community bank." So I actually started at about a $1.4 billion community bank in my hometown of Manitowoc. And after leaving the manufacturing sector of 17 years, we were acquired after 9 months. By the way, at that point, I had no clue what that meant. I didn't know if I was going to be employed. I was going through some personal challenges outside of work. So it was quite the time for me to, made me a little nervous, as you can imagine. 17 years of everything I've known. And in 9 months, I get this call from my boss at the time saying, "So we're being acquired by another bank." Everything happens for a reason, right? I did end up staying on with that acquiring institution for about 6 months, and somebody from Kohler Credit Union called and said, "Hey, we have a CIO spot we think you should look into." What happened is I had an off-the-record conversation with somebody, and they said, "We need somebody to help do a core conversion." And I could not run fast enough. That meaning run to here. That was music to my ears. Again, I didn't know it at the time, but doing a core conversion in a financial institution is almost the same as doing an ERP conversion in manufacturing. You have the same terms, you have the same data cuts, you have the same testing cycles. And that's what brought me to Kohler Credit Union. Here I am 3.5 years later. We did successfully bring that, our core conversion live in 2023, and I've loved the industry ever since.
Actually, a great follow-up question, and thank you for that background, not just for me, but for the listeners as well. But the passion that you have for credit unions is pretty evident. And like you said, you started in 2022. A lot of the executives that I have interviewed have been with credit unions for 2 decades. Forget about, 2-3 years. What makes, it so passionate for you in the credit union movement? What is it that it speaks to you personally?
Yeah, to me, it's like my dream job, because in credit union, community financial, regardless of who we're speaking about here, innovation leads. You have to continue to keep pace. And sometimes I wonder, does my background hurt me or help me? And I think in today's world, my background helps that I didn't come from traditional banking. I don't have 20 years of experience. And I think sometimes what that allows me is to get out of my own way. I haven't had 2 decades of this is the way I've always done it, right? Those words don't exist to me because I've never done it, right? And I just take a technology forward approach. It's again what I did in the ERP sector is business process change, right? You're always, business process improvement. And in our sector more now than ever, that's really important is we're up against some major players in the fintech industry. And I'm sure we'll get into some of that a little later, but it's innovate or die. That's the world we're in. So to me, I love that. I love that speed. That's where you and I met, Michael. It's, various conferences, being stuck in airports, all the fun things. And, it's what makes this industry exciting. It's you have to change, you have to pivot, and you have to innovate. It's not an option. And to me, that's what keeps me passionate. That's what keeps me, my board you probably can't see, but my conference schedule's behind me, where I'm going to be, when I'm going to be there, and just understanding the new technologies and innovations out there. And everyone you go to, something new is present, and that's super cool.
Well, I mean, for what it's worth, I would say that I think it's an advantage because, we all talk about how diversity and having, different points of view allow for us to just kind of look at the puzzle from a different lens to try and fix it. Because you're joining into the credit union industry, I think, at a perfect crossroads where most CFIs are trying to compete with technology when they're going up against things like fintechs. And I can't remember what the actual question was, but I remember seeing a video not long ago about with Steve Jobs. This is back in like 1997, and there was a guy that was asking him a question in front of the group, and he gives him a little bit of a shot where he says, what's the difference between Java and something else, and what have you been doing for the last 7 years? And the whole crowd kind of goes, ooh. Long story short, Steve Jobs turns around and he says, listen, where I think technology should start is not technology trying to fit the member experience. It's working the member experience and then working your way backwards from technology. And so to your point, sometimes having that 20 years of doing the same thing or being in that industry, you're trying to make the technology fit the member experience as opposed to a fresh set of view where now you're reverse engineering it. Maybe if I were to, with that context in mind, spin it back around, talk to me a little bit about how you see technology at the crossroads for your credit union, the industry as a whole, and maybe some of the struggles, pitfalls, trials and tribulations that you're trying to, overcome and what you're doing to handle that.
Yeah, I think it's to your point, the word crossroads is really, really powerful in this answer, and this statement is that the credit union industry as a whole, right? We're just known people helping people. That's what the credit union industry does. We're here for the people. The interesting part is where we are generationally. There's many studies about the various generations and how they want to interact with their credit union. And I think what's really important is, and I like to take generations out from this conversation, just as that, you know, you can't even go to a football game now without using your phone. So when people say, well, the baby boomers or the boomer generation, they don't like technology, I call bull on that, right? We all, we all like convenience. We all want quick. We all know Netflix, right? Everybody, and I'll make sure to share this with my mom. I use my mom as the example here all the time, right? She still doesn't want to walk in her financial and sit with a person. She'd love to sign a paper document. Thankfully, that's not even an option in most places, but she would prefer a piece of paper to sign and meet with a human. Me, please don't call my phone. I don't want to come in and see you. I will text you everything we need to talk about. And if we have to have a call, fine. But as a credit union, our average age of membership is, 50, depending where you are, right? Depending which credit union you're speaking to. So you're trying to serve a vast depth of various types of folks that want to do business in different ways. And the challenge becomes, how do we serve all of them? And that's the crossroads. When I bring it back to that, that's the crossroads that we're at. How do we continue to innovate, but continue to offer that human service that many folks in our segment population also want? And it's an interesting time. Obviously COVID fast forwarded a lot of the, getting people used to technology and mobile deposit, internet banking. And that was, the curve that really spiked. But there's still many people that now very much enjoy walking into a branch and saying hi to that teller, and that teller can know you and your family and your dog's name. And that's very powerful. and we have to meet all members.
Yeah, I think, that I also think, I mean, I could use my mom as an example as well. Hates it. I always have to, not only does she want to walk into the branch, but she also makes me accompany her because she wants me to be there just in case.
Yeah.
Dad passed away a number of years ago. And so now it's up to me to do that. And I'm happy to do it with her. But for my banking, I'm with you. Don't call me. Don't, just let me figure it out on my own. The experience is different for everybody. And when you start to multiply, some of the fintechs that are out there, including, companies that are structured to be kind of financial services, but also the competition for deposits with multiple wallets. I think there was an article that just came out not too long ago that Starbucks has nearly 2 billion in sitting in deposits on their cards. $2 billion just in deposits. I mean, that's larger than a significant portion of credit unions that are there. So to your point, that experience or what we're doing to compete for those dollars, really important.
Absolutely.
What are you guys tackling when it comes to, looking at the member journey and, trying to spread across the generations, or what kind of technologies are you looking at to amplify the experience for the member so that you can compete for stuff like that?
Yeah, I mean, great segue in, right? I probably read that same article you did. There was a conversation on LinkedIn yesterday speaking to what you
Yes.
just said.
Yeah.
We are in a more fragmented financial market than we ever have been. And I think it's actually going to accelerate now because everybody wants to get in that Starbucks game, right? To your point, they're sitting at 1.9 billion. If you saw the same article I did, they had 178 million. I forget the term they used, forgotten about. So Starbucks breakage, that was it. So we did read the
Breakage.
same thing.
Yep.
They had 178 million for free, right? Here I am fighting for deposits and every other community financial out there. And if you read the same article, you read Walmart's going to get into this game, right? They'll incentivize you to keep their funding within their platform. Amazon, obviously, already when you get returns, most of the time the money stays there. So how do we bring these deposits back? And I think it's thinking like a fintech. And my boss actually asked me one day, he's like, "You think we're becoming a technology company?" It's a dangerous term, but at the same time, I think you have to somewhat think like a technology. How do you offer the convenience, the services, the bells and whistles? At the end of the day, you walk into a community financial, we all have checking accounts, we all have savings accounts. Why we still call them checking accounts is another whole conversation we could do a separate podcast on because we're not writing checks. But the base products we offer as financials are usually the same, right? There's not too much differentiation. But once I have you as that member, once Michael comes and joins my financial institution, it's how do I take care of you after that? That's what's most important. And I think that's where you get into, to your question, what are we doing? We're looking at a lot of digital products and services. How do I offer those same services and things that you're doing at other partners? You're already doing some of these things at other institutions or other services. How do I bake that in digital? How do I make your life as easy as possible? How do I let you communicate with me how you choose to communicate? You, Michael, you may want to text me. My mom wants to call me. Some people want to come in. We're going to get into video chat, right? I think it's all about meeting. It's something I say a lot here, meeting your members in your members' channel of choice. And for the CFIs out there, your customers, right? People have all different ways of wanting to interact, and we have to meet them there because there will be plenty of other players that will. So it's just all about creating sticky products, services, but where it really lands, member service, right? Or customer service is, we've also, a lot of people, there's very little loyalty left in the game of financials. So if I am taking the time to contact you or come into my financial, providing that exceptional member service is what's going to keep you coming back. It's going to keep you with my institution. And I think that's more important now than it ever has been.
Couldn't agree more. I mean, something like Starbucks, it's really difficult to compete with something like that because the only thing that you can exchange it for is that coffee, right? And so that's the piece that everybody really wants to go after. But in the same vein, there are services like Venmo, Robinhood, et cetera, a lot of different PayPal, a lot of different, services that should offer what CFIs typically offer. Money transfer, being able to invest into securities, things like that, that financial institutions are very well equipped to be able to handle. And the idea was, well, take the experience of the member that is fragmented, build the technology around it, and now offer it to the public. And that's where the public starts to go forward. And so to your point, that loyalty piece, going back a couple of generations when the technology was a little bit more finite, I think it was easier to have that personal relationship really carry the day. Now with the multiple generations and a little bit of an affinity to have more of a service first relationship, it takes the personality out of it a little bit. So the idea now behind all of the providers that are out there, how do you marry the two? And I think that's the secret sauce that you're trying to tackle with Kohler Credit Union. That's why I was so excited to be on this one, Matt. I know that we had that long conversation before jumping on planes, but I wanted to maybe twist it a little bit because you're also looking at not just going after the online stuff, but you're also looking at branches and beyond just rates and branches, and reframing the conversation around growing the credit union. Right, the traditional strategies that we've been looking at really don't resonate as much. Credit union growth has been flat for many, many years, and in many cases, it's shrinking as the older generation kind of passes on. Talk to me a little bit about, how you are sustaining that growth or diving into that growth.
Well, it's really about how we're reaching memberships, right? It's being able to expand your footprint. Obviously, physical is one way, but digital is another. But again, it comes back to meeting those members where they want to be met. So you don't always have to go build a branch to grow that membership, but you can be present in different ways. So, right, I mean, even walking into your other communities, and again, Kohler Credit Union, we're here for life. So that is something we really, really stand behind. And when we say the tagline "here for life," we mean it in a couple different avenues. We're here for you, Michael. We're here for your life. You need a car loan, you need a mortgage. We're cool with that, right? We're going to offer you those products and services. But what's more important, we're here for life for our communities. So what we try to do a lot of is just be present. Be present at the communities that we serve. We don't have a branch everywhere that we serve, but if you're in our charter, we want to help that community. And it's not we're not there just to pound business. We're not there to advertise. We're there to truly be there for the people. And I think there's more and more potential members and customers that are paying attention to things like that. Right? What is Kohler Credit Union doing to the world around us, not just what products and services they're offering? So we really try to come through with that. There was just we have an internal communication regarding possible volunteering opportunities, and a new one came through this morning, just packing up meals and giving meals to families that need it around Thanksgiving. It's simple things like that. And we're not there handing business cards out. We're not there trying to, hey, do you want to open a checking account? Those are people maybe going through tough times. Let's just offer them a meal. And if one day they think of us, all the better. But you can do that without that physical presence. Just go give your time, your energy. And if it comes back in the term of business, cool. If not, we still people helping people, and we want to be here for life. And that's what we stand to do. And I think that's speaking to our membership. That's speaking to the population around us. We're at almost every sporting event. We're always trying to just give our time and hope that comes back.
I couldn't agree more. I think, every credit union has a mission to obviously give back to the credit union. I got to say, Kohler Credit Union does an excellent job of really trying to engage in as many things as humanly possible, not just with checks, but with dedicated time and organization as well, which sometimes is the harder part, right? Just having money, you can't always just throw money at a problem. Sometimes it takes somebody to pick up the shovel and dig. And I think that's really where we start to connect now with the younger generation. The younger generations are very, very mission driven.
Yes.
I think far more than at least my generation. I'll throw myself under the bus. That Generation X that doesn't give a damn about anything or anybody.
Yeah.
I don't know if that's necessarily true in terms of the generation, but certainly the younger generations, they speak different, they think different, and it all does come back into that. Where do they want to align themselves? And a lot of it is just it's convenience. We had a conversation, speaking of convenience, we had a conversation where you told me a story about buying a car entirely through text. I would love for you to take, the listeners through this story, talk to us about what that was like, because I think this is a perfect example of, fintech meeting the needs of what it is that we're looking for. And you're a perfect example of somebody who is in a credit union, and now you're making a major purchase, probably the second most expensive purchase in your life cycle, other than a house. It would
Yep.
probably be a car.
Yeah.
Walk us through what your experience was.
Yeah, I mean, as I kind of shared before, and I joked, right, is I have when my phone rings, it's like, why is that thing well, it doesn't make a sound. My phone hasn't made a sound in 20 years. Remember when we used
Yeah.
to pay ringtones? How funny was that? Now I smash it if it makes a sound. But, I don't use my phone for voice. I mean, truly rarely. But I was interested in a car. It was in a different town, so I couldn't just cruise in there. And I on the ad with the dealership, shoot us a text. So I did. And I really actually, I guess I'm gonna back up just a hair. There was a few dealerships that I shot that text that I could immediately tell I ended up in some kind of system, right? And I don't know when's the last time you've dealt with car dealer systems. They are not modern.
Yeah.
They're extremely canned. They fire extremely unpersonalized text. You can very much tell you're dealing with not the current state of AI when it gets in the texting. Well, this dealer, a human texted me back, right? And I could tell it was a person, and I could tell it was them. And what I did is we chatted for, I bet you, 2 weeks, just various questions on this vehicle. I had planned on being in that area in a couple weeks after that. So I said, hey, I'll come and, drive to the parking lot, take a look at this thing. I didn't have to drive it. I knew I liked the vehicle. It was really about price, convenience, time to be there. But I never actually met this human. I never met this gentleman until I showed up that day to buy that car. And it was very interesting to me that when I did get there and I met him, his name was Ed, and I shake Ed's hand, and I kind of joked, I'm like, we actually never spoke once. We never had a human conversation on a phone until today. And it kind of dawned on me at that point, like, wow, that's different, right? But it worked. And why did it work? Because it was convenient, because I'm in meetings all day, right? I'm all over the place. I can't sit and take Ed's call at 2 o'clock on a Friday and I'm in the middle of a meeting. So guess what? I can respond when I had time to respond. And it's also about, what is my expected speed of response? I did not expect Ed to get back to me within a second. My channel of choice was that I am not in a rush. If you text me back tomorrow morning, that's cool. I'm probably going to text you back that afternoon. That speed of communication worked for that situation. And that's what I chose and I wanted. And they met me there. And they got that purchase, right? There was other dealers that I filled in my contact information. My phone lit on fire. They're calling me. You can tell, like, that's not what I chose. I said text for a reason. And I think it speaks back to our industry is kind of what we spoke about, is different people want to communicate in different ways. If I choose text, let me use that channel. If I'm more urgent, I may call you, right? If I'm really not urgent, I may email you, right? But that's what we have to deal with, because that's how humans are used to connecting now in various ways.
I couldn't agree more. I'll make two comments. I remember my ringtone when I had one of my first cell phones. It was that ringtone that I downloaded. I think it was like 99 cents back in the time. It was Limp Bizkit Break Stuff.
Of course.
For those that are too young that don't know what that song is, Google it, and you could tell that I was probably a little bit of a pain in the rear end growing up. I'm probably still a pain. Yeah. I haven't gotten over that. The second piece that I want to touch on is that experience. I can't tell you how many times I've had conversations with credit unions, and this is a really important point on a serious piece. Eltropy has gotten into the payments piece to try to make payments a little bit easier. And the number one comment that I get from credit unions is, well, we want our members to pay through the account that they have with the credit union. Well, I know you want to. I want everybody to be on time with their bill. It would be phenomenal. What we want and what the industry wants, or what we expect as an industry, as a consumer, are two very, very different things. And to your point, if you had reached out to a couple of different dealerships and you had mentioned, this is how I want to engage, Shame on those for not listening to what the market is dictating. And that's why, that dealership got the sale in terms of the car, because they responded in the way that you wanted to do it. And all they had to do was just listen and say, okay, we'll do it. You've made the comment a couple of times, talk to me like a buddy next door. I think that line that you said to me has stuck in my head for a very long time. It's probably why we get along. I kind of speak like that to everybody anyway. Just, it is what it is. But give me a little bit more essence, because it was you that came up with that line, and it's been a seed, growing in my head, since you mentioned it. What do you mean by that?
Well, I think it's just think about our interactions, think about our life, think about how we move through different interactions. Just speak to me like you speak to anybody else, right? Create that connection. Again, I talk a lot about this here at the exec table and other things, is that we as credit unions, we have a pretty distinct competitive advantage. We have buildings and we have people, right? That differentiates ourselves from the Chimes of the world, the Venmos of the world, right? I can't afford to have Will Ferrell dancing around in a commercial offering you 8%. I'm sorry, I can't afford that, right? But what I can do is I can connect you with a person. And when I do connect you with a person, and I do experience that interaction with, just talk to me like a person. Just say, hey, what's up, man? How can I help you today? I think we just want normal people interactions. Well, and I don't care where that is, right? Whether it's text, voice, on a phone, on a video, just like you and I. And you've met me enough times now. That's exactly how I present myself is, hey, what's going on? And I think too many times you have these interactions, and not just in the communal financial space, but anywhere, but people put this facade on, and you can tell. Just get rid of that. Just have a conversation, be human, kick back, have fun with whatever you're talking about, whether it's the mortgage or the car loan, and relate. Try to relate to people. Share an experience of yourselves. And I think we miss that human connection. And I guess I'll go against something I said myself. It's probably because we live in a world of text and less real conversations. So it's kind of working against itself. But again, that's where I say just use that effort and speak to everybody, just as I'm talking to you right now. I mean, this is, you've met me enough times to know that this is how I speak, regardless if it's at a conference, at a board table, when I go home and speak with my family. And I think people just want that. Just be real.
Yeah. I obviously I tend to focus a little bit more on the collection side. That's where, I've come from. The word that I use mostly to describe what you're talking about is empathy, because normally in a collections space, the emotional state of the individual is not a pleasant one. Normally there's something wrong that's happening. Whereas on the lending side, on the acquisition side, it's normally excitement. For the most part, depending on what it is, like buying a car or buying a home, that's an exciting process. And we tend to train, loan officers to really dig into that, to figure out, well, what is the budget of the home that you want to get versus what you qualify for, right? Same thing with a car. Everybody would love to drive a Ferrari, but, not everybody, can, and maybe not everybody should. Same thing with the homes. And so that you don't overextend yourself, so that way you're not in trouble later. And so speaking like a buddy is the empathetic way of doing this. And, for a couple of years, I've been, kind of beating down the drum of, being a little bit more playful with messaging, where you can build that relationship. I made this comment a little bit, and there's a couple of customers now that have taken the plunge with this, like in an auto loan, scenario for, certain demographics. Your auto loan has hit a speed bump. To get it back on track, click here, with a couple of emojis that are coming through. And so, the stuff like that would just kind of make the person smile a little bit. Or, if they're not responding, reach out and just say, we're here to help. Yeah, click here. Yeah, and just straight to the point. We know something's up, instead of dear insert name here, right? And make it sound less personal. Meanwhile, credit unions are all about that personalization. Yet somewhere there's that ball that gets fumbled into it.
I love
don't
that
know.
example. That's exactly how we talk, right? That's such a great example, that what you just used there is, that's how you talk to your buddy, not, dear member, right?
Yeah. Yeah, yeah. Freebie for everybody out there. Start changing all the subject titles. You're welcome on that one. Uh, Matt, I'd love to, what are you looking at in the, ooh, I just moved everything here. What are you looking at in the future? Let's talk about, what's ahead. What advice would you give to credit union leaders and boards? Now that you've had a couple of years, going through this, what's some of the observation that you see, and what would you make a comment with?
I would say pay attention to your surroundings, and I'll obviously elaborate on that a little bit. When I first joined, even here, we sat in the boardroom, and we'd always look at our competition as physically located around us. Don't do that. Your competition is not the credit union across the street. And taking that a step further, doing competitive analysis, saying, hey, these guys are doing this, we should do that too. Look that. Find out what they're not doing and do that. And that's what I really, really focus on is I don't care what the credit union or community financial in my area is doing. I care about what they're not doing because that's how I'm going to separate myself from them. Catching up to the person that's already doing something isn't going to get you there. I also think it's very, very important to realize the world that we live in, right? We live in an Amazon and Netflix society. I often joke, Amazon has the package on my porch before I click buy. We have to respond in that same way, right? Obviously, it's not, but you know what I'm getting at is, especially if you're in a bigger city now, what do you have, same day Amazon packages? But yet, if I walk into my financial and you're like, well, we have an appointment tomorrow, bye, you've already lost that individual. But how do you do that, right? How do you staff to that level? How do you meet the people how they want to be met? Because we live in a right now, I want it on my terms, when I want it, how I want it society. We as community financials have to meet members in that same plane, right? And technology is just going to, I was, as I mentioned, before we started recording here, I was at a conference in Chicago with a partner of ours, and they shared, technology is moving at a speed now faster than it ever has, and AI is just going to whiplash that a different way. And the other thing that always sticks in my head is actually at the Eltropy Leadership Summit. I forget who said it, but it stuck in my head greatly, and it actually ties into my experience in that how credit unions have operated the last 20 years is not how they're going to operate the next 20 years. Basically, what got us here today is not what's going to keep us around, right? And look up the numbers. For anybody watching this, I'm sure consolidation industry, mergers, acquisitions, the quantity of financial institutions continues to go down over time. Fintechs continue to increase over time. I heard, here's one for you. I heard Mr. Beast filed a trademark or a request to become a financial. Now let's think about that for a moment. That is true. You can
You
Google it.
kidding? Oh my
Mr.
goodness.
Beast, for those on the call, probably younger than me because I barely know who this fella is, but I know enough, has filed to become a financial. Now think of the Gen Z market out there that this man owns.
Oh yeah.
Come to me and put your money here, and we'll offer you products and services. He'll become the biggest financial overnight, right?
It,
He'll trump.
billion plus.
Yes,
Yep.
immediately, overnight.
Yep.
And so that's the world we're in is, so when you talk to boards and talk to other financials, it's like, pay attention to the world around you, understand what's happening outside of your walls, outside of the walls of financial institutions, understand how the world is changing and react to that, because that's what your customers, their members are doing. They're using their services, they're using their phone apps for everything. And if you're not there to meet those people in the channels they choose, we're not going to keep them. And we all know that, as we talked about before, the average age of a credit union member is getting up there. How do we get in them younger generations? I was smacked in the face just a little bit this week when I learned the oldest Gen Z is 28. I was not ready for that information. In my head, they're still 14. So that was yikes. Time has moved a little quick on me here, and
Yeah.
I'm getting older now. But 28 years old, what are you doing at 28? Looking at building a family, buying a home, buying your first fancy new car, or you're really starting to get your feet under you. But you've grown up in you are a digital native. You've grown up in a digital only world. You were through COVID in your 20s. How do we get those people? Right. And that's what we have to focus on is I don't think we're doing a good enough job getting after that market. And the number of times I heard TikTok on Tuesday was beyond me. Just talking about be there where people are consuming their financial information. I don't want to think about getting advice from TikTok, but they are. And instead of trying to fight and trying to say, well, you shouldn't be doing that, why don't you instead just be there so they get that information from you? Because you're not going to tell younger consumers what to do. Be there where they want you to be.
100%. So first, shout out to Peter Duffy. Peter Duffy, also a podcast member before that leadership conference, was talking about that, where he said, if you think the last 5 years, were wild, just wait for the next 5, which is going to be, game changing for everybody.
Yep.
And so really, really great comment there. And you're right. That has stuck with me as well. Really important piece, because I've also done a little bit of research with what they call these finfluencers, right? Which are these influencers of financial advice on things like TikTok, where they're talking about things like cryptocurrency or where to invest in. These guys have a terrible rate of return. And, statistically, my father would always tell me that even a broken watch is right twice a day. Come to me when you get to 3, and so these guys may, find a nut in the grass, every once in a while, but they're not gonna be consistently out for the public. Most of this is a little bit of a scam where all they want is the viewers and the clicks. It's not about the financial advice, and it's dangerous. And there's a gap there, because how many of us on the credit union side are really leveraging that influence that we could have to create our own internal Mr. Beasts that push, those generations into the next level. I'm with you. I don't know if it's you or I that are going to start those channels and get a massive following. I am so tempted to just turn around and just start saying 6'7", 6'7". Yeah.
I just got a video from my daughter doing that. Honestly, Michael, right before we jumped on this, I saw a video from my daughter that was doing 6'7" in the car. So again, that's, and we all know what it is. We don't know what it means, but here it is.
Exactly. And, each generation has their own slang and their own language, right? And every new generation that comes up, they always make fun of the older ones. My father had an amazing saying growing up, which I've never heard to this day. So I don't even know if this is a generation thing or if this was just, my dad. And so growing up, as, a parent does, you want to make sure that your kid always has a couple of bucks in their pocket to make sure that they're okay, especially once you graduate and you start living life. And it's really easy to get yourself in trouble with things like credit cards and, all the rest. And my father was an accountant by trade, and he would turn to me and say, "How are you fixed for blades?" And that was his way of saying, how are you doing for cash, right? It was a way to say it out loud that wouldn't embarrass the person. He can say that to me and it sounds kind of cool, but what he's really saying is, hey, do you have enough money in your pocket? Now, if you turned around to a kid at, 18, 19, 20 years old and say, hey, do you have enough money? You know how embarrassing that could be if you're doing this in public, but it was a way for him to say it at any point in time without, kind of doing it. So there is something to the language that we use, which goes back to the original piece of talk to me like a buddy, right? Use the language that I use to connect with me in a way that we connect. And so we're probably not going to be able to connect to the demographic of your daughter. We're just not cool. I think anyone seeing this is going to, if they're that younger generation, they're just going to hit pause and walk away for a minute. But I think you make a really great, valid point. Are you guys doing anything like that today, or is this still fermenting as an idea of playing around with language?
Well, and that's where we're still struggling, right? We're still struggling how to balance speaking to our membership as a whole. If you start putting ads out there, you're doing 6'7" and crazy dances, my mom is going to be like, what is happening right now? Right. So how do you, again, it comes down to personalization and targeting, and that we are having those conversations is how do I start to now speak to people, right? How do I reach different demographics in different ways with different language? Again, it's a big problem. I'm sure many of the listeners out here are thinking the same thing. How do we continue to personalize our message and speak to different people in different ways, or the way they want to be spoken to? But yes, I don't have the perfect solution yet. We talk about it all the time. Again, it's that's the key. I mean, that is the key, is trying to figure out how to deliver everything on a personal note. Again, I'm going to go back to Amazon. When I open Amazon, what do I see? I don't see the same homepage you see, Michael. I see a homepage that is curated because they know everything I've purchased. And this whole page is filled with things that I'm probably interested in, right? Now, does your financial do that? No, they don't. Go to my homepage. My homepage is the same for you and me and everybody else. Now, imagine a world that changes, even in digital. And we are working towards things there where the digital ads I show you are curated because I know Michael. And I need that to come out, right? I need to know that this is for me. This is my experience, not yours or not our parents, right? And when my daughter eventually opens a bank account, we can go back to the 6, 7 in the digital, and we'll get there.
This is where I think AI is going to have the biggest impact, because to be able to collate that information and then, personalize it to each and every experience, that's exactly what happens with things like Netflix and AI. It's more machine learning than it is, artificial intelligence. It's based on selections that you do, and there is a path forward to that. Matt, as I wrap this up, you mentioned, the leadership conference that you were at with Eltropy. You were great up on stage. You were at one literally just yesterday. I will throw you under the bus here for a second. If anybody sees Matt on the road, talk to him. He's an incredibly great guy. He may not pick up your phone call. He'll pick up your phone call. But I would encourage, everybody coming to talk to you, because you're interesting. You're cool. You're fun to hang with. Where are you going for the rest of the year, and what do you got planned, into early 2026?
So for the rest of the year, we're actually doing a systems merger in 7 days. So the rest of my year is pretty booked. Next Friday, we take our core down and bring 2 cores together. So, no stress at all on a Friday afternoon, knowing I'm 7 days from that event. After that, conferences will start up next year, right? I'll be at GAC. I'll be at the Q2s, the Eltropy Summits, all the big ones that are out there, Fortune financial brands. I'm at all those events. If it's FinTech, I try to be there. For any listeners that want to dig in, feel free to reach out on LinkedIn. I'm pretty active out there as well. But thank you for the shout out, Michael. I just heard you say I'm cool, so I'm gonna snip that from this.
Send it to your daughter.
And I'm gonna show my daughter that this is on the internet. Somebody said I'm cool, and I can prove it. So that'll be the next phase of this.
Well, I always look forward to whenever we're hanging out, we grab a drink together. We always have a great conversation, and what starts as like 5 minutes ends up being an hour and a half, and it still feels like 5 minutes. So I look forward to a lot more of those. And Matt, honestly, I think some of the work that you've done at Kohler has a fresh perspective. You are certainly member first in the approach, but technology driven as the outcome. And that helps with things like fraud. It helps with things like experience. It helps with things like growth, which has been all of these, kind of pills that we need to take in the industry as a whole to kind of curtail the shrinking of credit unions and get it back on track with the growth side. So I deeply respect the effort that you have, and I think you're one of those credit union leaders that credit unions need. And that's why we were so happy to have you on the podcast today. And so just a big thank you, not just from me, but the entire Eltropy team.
Yeah, thank you for having me. I had a blast, and do many more of these if you'd like.
Yeah, hopefully I could be all over the planet instead of back home Montreal when it's going to be about -30 in about a week. On that note, guys, thank you for joining us on the Eltropy Exchange. My name is Michael Pupil, Vice President at Eltropy, and I was here with Matt Fehrmann, the Chief Information Officer at Kohler Credit Union. Join us next time on the next podcast. Stay safe, everybody. It was great having you aboard.
Bye, everyone.
Thanks for listening to this episode of the Eltropy Exchange podcast. For more insights and resources, visit us at eltropy.com. We'll see you next time.